Welcome Market Life and welcome to the free video for June 11th, 2020. So let's look at a setup here in the stock indexes. We're going to look at the S&P. You'll be able to see a similar setup in most indexes. Now, what we've been talking about here for several months with our members is there's been no reason to even think about shorts for most of this advance. There were a few spots where we had potential triggers. It's kind of like a setup for setup is the way I think about it. If this happens and this happens, then we can look at shorts. So we had that kind of first stage, but never beyond that. And the fact that we never got beyond that really kept us very, very focused on the long side. Now what we're watching is a market that might be overextended. And we can see this because this is the first time we've been back up to the Keltner channels since this decline. And I could bore you with stats here for hours, but this is very unusual. It's unusual to see a decline like this. We know the snapback is unusual, but then to be at the top of the Keltner channels relatively quickly, and this is in the space of months, but it's a gigantic decline. It's unusual and almost unprecedented in history. So the fact that we're back here means in the near term we're a little bit overextended. Now, here you get this kind of chain of ifs, and it's relatively simple. If we can hold together in a relatively well-behaved pullback, and I've drawn on the screen roughly what we're looking at. If we see that, and so far what we're seeing is that, then we want to take upside breaks. And this can be as simple, folks. You don't really have to complicate this. Trade your favorite stock to the upside. Take trades in spiders. Take trades that you're going to hold. These are going to be overnight holds. We'll look at stop location here in a minute. Take trades in futures. You can even do that in micros. You could potentially set up the trade with options. I would not just buy calls. I don't want to trade verticals if I did that. But the idea here is, if we get a well-behaved consolidation, we want to take upside breaks out of that bull flag. Now, stop location, it's hard to say because we don't know where the flag will end. But what you're probably looking at is look at the bottom of the flag, and then if you're looking at spiders, maybe add 5 points. And you can do something very, very similar for futures. We will be rolling futures here very, very soon, by the way. That is certainly something to think about. But your approximate stop location for futures is going to be 50 points, 50 handles under the bottom of the flag. Now, you might be thinking, oh gosh, I can't have such a gigantic stop. Well, trade smaller or find an instrument where you can get that kind of risk that's appropriate for your account, because what you can't do is use a stop that's like really, really super tight. So that's what we're looking at here. This is a setup for a long setup in stocks, but it's a good setup. And a very good target is, let's remember, all-time highs in the spiders and in the S&P just overhead. So that's all we have. If this is useful, and if you'd like to see more of this, how we go into detail for our members, check out my work at marketlife.com. I do market analysis like this, actually more in depth every day, and we look at specific trading candidates for stocks, options, and also for for some futures markets. But we also do a lot of analysis in forex too. Check it out, marketlife.com. Thank you very much.